Hello, it's Wednesday, September 17th, 2025, and it is Fed Day. Hooray. Let's see if we can make sense out of any of this. I think that, first of all, we sort of knew, as I talked about yesterday, that there was a big feeling out there by a lot of people that seemed very consensus that today was going to be a sell the news event. Meaning, the Fed cut comes, the Fed cut that everybody was expecting to come, and then the market sells off because you're buying the rumor and you're selling the news. And a lot of people wanted to do that. Why a lot of people do want to do that? In my view, it still means a lot of people are bearish. Why would you want to try and do that if you were bullish? I think it gives it a clue to the fact that people are still pretty bearish. But anyway, and so they did that. This was when the Fed came out. There's 2 o'clock, and here they are selling the news. And they came right back. We ended up sort of right where we were pre-Fed, which was right here. That was it, right? Pretty typical of an overhyped situation. And the NASDAQ, which was sort of weak all day, did pretty much the same thing. You know, this was Fed and they sold off and then came back up and it actually ended up higher. Russell, basically same thing. And the Dow, the same thing, right? They all did the same thing. So it was silly, a waste of time to try and do that trade, as you would have expected. Now, how I saw it, I think, was that I thought that the comments from the chairman were not as supportive to rate cuts as people would have liked, would be my comment. He didn't crush it or anything like that, but say it's slightly a little more hawkish as to future rate cuts than people would have liked. So if that were the case, what we've had is this one big trade, as I've been talking about, which is long stocks, long bonds, short dollar, long gold and stuff, based on expectations of interest rates continuing to come down. So if those expectations of interest rates continuing to come down were made a little bit less today, then that whole big one trade should reverse a little bit. And that's kind of what happened. You know, S&P went down, a few points. Gold actually went down quite a bit on the back of all that. Let's get it right here. Gold had a pretty big down day. Silver, which is classically more volatile, had a big down day. Please notice that yesterday, silver actually had a reversal day, even as gold finished up. Silver was the weakest one yesterday. It followed through and was the weakest one today. I think that kind of makes sense. Bonds reversed on the back of that. And the dollar reversed on the back of all that. So I think that kind of makes sense, given that there's now slightly less expectations for aggressive rate cuts into the end of the year. So we had a slight move against that sort of big, beautiful trade that's been based on rates coming down. I don't really see that there was anything abnormal there. What I think is interesting and what I think is the learning point here is which assets went down the most, right? And I would argue sort of on a vol-adjusted basis, yes, silver, but the euro, the dollar was really the biggest mover, right? In particular relative to stocks. And we know that, I think we can say that while there are some bulls in the stock market, there's also still quite a few bears in the stock market. It's pretty mixed at this point. But the dollar seems to be where sentiment is most bearish, right? There's not a lot of people that believe the dollar is going to go up. And that is where the biggest move the other way went. Makes sense. That's where the positioning, first of all, you can see where they're very long euro, as opposed to S&P, where they are not very long. In fact, they're short. You can see where I would think that the bias would be should things flip around. They would flip around most in things like the euro. And that's pretty much what happened. So I don't think there's a big surprise there, right? It did like what you would expect it to do. I thought today was all about doing kind of pretty much exactly as you would expect. If I told you that he was going to cut by 25, but it was going to be a little bit more of a hawkish cut, what would you expect to happen? You would expect the trades that were looking for more interest rate cuts to reverse. And for the most part, that's what happened. So no big change from expectation there. But again, I think the learning point is what moved the most, and why did they move the most? The things that move the most looks to me like the things where people are most bullish and things where people are most long. It makes sense. If they're going to unwind that, they're going to unwind more of the stuff that they're super long, and then that's what's going to have the big move down. I think that's the thing to take out of today more than anything else. And the interesting, of course, will be now what, right? Now what? We had everybody try and sell the news in the S&P. That didn't particularly work very well. It worked for a little bit, and then it failed, right? Okay, so what? So now what is the question, right? And I just think we're going to go right back to where we were, right? Especially given that he gave the speech the way he did, we're right back to where we were. What's the employment numbers going to be? What's the CPI going to be? What's the PPI going to be? And how is the market going to react to how that stuff comes out? We're right back to there. I don't think there was any change today, personally. So we're right back to those things because that's what's going to matter. And we're going to be looking for, again, as always, the market to react in a way that we wouldn't expect if CPI comes out lower. And that gets people to believe that interest rates are going to come down fast again. How are the markets going to react? Is the stock market going to go up? Is the bond market going to go up? Is gold going to go up? Is the dollar going to go down? Those are the things we're watching for. And when they don't, that pokes our head as to maybe a possible sort of good risk reward counter trend trade. Okay. So those are the thoughts today on our big Fed day, and we'll catch up again tomorrow. Thanks. Hope everyone's doing well. Please like the video. Thank you, and talk again tomorrow. Hi, I just wanted to say if you like these daily videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.